Traders, Raghee here. Welcome to Charts and Coffee. Hope everyone's doing well. Hope everyone had a wonderful weekend, relaxing, spent some time away from the mic, or I should say the computer. I'm back at the mic. So some time away from the computers, away from the screens, and hope you're refreshed for, really this week is probably the beginning of the year as far as I'm concerned. We've got past the kind of the liquidity issues that happen right at the onset of the new year because of bank holidays globally. And we got past the ISM PMI numbers, FOMC, non-farm, and then we have a lot of data and really what we can consider more full participation as we go into the remainder of January. So as always, the show is about your questions. So, well, without further ado, let's dive in, okay? All right. So first question, we see actual greater than forecast is good for a currency. In the Forex Factory details column, I'm wondering if you can break down just what that means as a trader. Sure. So I talk about hot zones, and I talk about this idea of knowing when the scheduled events, typically kind of a headline number release, is going to hit a market, like the Kraken sometimes. So if you take a look here, let me grab my drawing tools. What's an episode of Charts and Coffee with some drawing all over these things? So take a look at the columns to air-conditioned gypsies question. Here's your actual column. Here's your forecast column. And the question is, what does it mean? Well, remember, forecast is really what? It's what we expect. This is what's been discounted. This is what has been priced in, baked into the cake. Pick whatever a lingo you'd like. That's what we're expecting. And then the immediate volatility on the hot zone, sometimes the wick higher, sometimes the wick lower, sometimes the follow through, is the adjustment that happens after we know what the actual number is. So we guess at it, we find out if we're right or wrong, we readjust. And that's really in a nutshell what it is. All right. So thanks for the question. And thanks for bringing up the fact that we need to take a look at the calendar, hopefully every single morning before we start our day. And also looking at not just the calendar right now of the economic releases, but also the calendar of the earnings. We're right back into earnings season, gang. So make sure you've got, wherever you track earnings, I like to use Estimize. That's my preferred calendar. But thanks for the question about, those events. Appreciate that. All right, Jim, good morning. Could I review how I use volume profile, what time frame I use, and how I think low volume nodes versus high volume nodes? Okay, so volume profile, really easy. It's support and resistance. Anything that sort of escapes that foundation is noise. It's support and resistance. What time frame do I use? For me personally, when I'm day trading, I focus on 2 and 5 minute charts. And when I'm not day trading, Jim, I focus on the daily time frame. If I'm managing my portfolio and I'm looking at my longer term time horizon, I'll use a weekly. So it doesn't matter what time frame you use. There's no magic. I think out there's this thought that if I use volume profile on a 30-minute chart, I'm going to see the things. No, there's no magical time frame at all. So I just happen to day trade off of 2 and 5. I probably can go 1 in 9. It doesn't really matter. So I've just sort of abandoned the search for the best time frame. It doesn't exist. So I can appreciate the question about the time frame. So I use 2 and 5 intraday daily for my overnight trades. And then what do I think of low volume node? I don't think of them at all. High nose, low, I don't even think about them at all. I do pay attention to point of control. I do pay attention to a little bit to value area high and low as targets when I'm day trading. But, all the fancy lingo that comes after, like I said, anything that precedes volume ledges are support and resistance to me just becomes noise. So That's just me. So if you like a little bit more nuanced view and some of the lingo that kind of accompanies that, that's fine. That's cool. I totally get it. But for me, I'm just looking for the ledges. I'm looking for the level that has the most volume, point of control, right? And then I'm looking for different areas that are standing out because they're quite literally standing out, right? As they jut out from the right side of my chart. So thanks for the question. And thanks for the question on volume. I love it. Thank you, Jim, because really where I'm moving as I go further and further into my trading career is, look, I've got all the price analysis tools that I need. Now it's how do we find those important volume levels, price-based volume levels? How do we find those important volatility zones? How do I better use time? So thanks for the question. Excellent. Thank you. All right. Kathy asks, many of us do not have access to dollar index. Yes, that is absolutely true. So we need to use a corresponding future symbol or UUP. Well, Kathy, if you've been following my analysis, the free stuff that I share over at the Simpler Trading YouTube channel, you can actually look at the 6E. In fact, 6E, FXE, Euro US, that's a great alternative to dollar in that if I want to be long dollar, I better darn well have a really good narrative that syncs up to be short the euro. There will never be a dollar trade to the long side that doesn't in some way have bearishness or a dollar trade to the short side in the euro. They have to be synced up inversely or negatively correlated. So that's a really easy way to do it. Just use the euro instead of the dollar. If you're using dollar index, because most of my dollar index trading is going to be on the daily, it's not ideal to look at the DX, but you can pull up dollar index with that delayed feed just to get a feel for where the levels are. And then, yeah, if you have to use the UUP, that's perfectly fine. That's perfectly fine. Okay, so that's how I would recommend tackling that. Appreciate the question, Kathy. Michael asked, good morning. Oracle. Sure. Let's jump on over there. All right. ORCL. All right. JT Multi is red over red. Absolutely. So remember, gang, before you pick your favorite indicator from your list of favorite indicators, before you apply any indicator, always remember that it has to be used within the context of the underlying market. And we have, Michael, to your point, transition to a downtrend in Oracle. You got it. It's very fresh. It's very new, but it is visible. 8, 13, 21, 34 period EMAs being measured in these two rows of colors. I like my color coding, that's for sure. It's harder to argue with red, green, and yellow. It's easy to argue with a number, right? Something about the color coding is like a traffic light, right? It's just red, yellow, or green. Yeah. So here's what I would say. And this is where a downtrend that's very, very fresh, only 3 sessions worth, meeting the 200 exponential or the 200 propulsion, which are the dots on my screen. This is where it gets a little tricky. I'm much more bearish south of that 200 propulsion. There is a very good chance at around 85, 80 to 85 and a half, buyers start to step in, despite the fact that this is a double red downtrend. So I would not rush into shorts here. Now, if you're double red and you're south of the 200 propulsion, completely different conversation, really great setup. The broader sentiment of a market is still bullish. It's the equator, right? We're still in the bullish hemisphere, not by much, but we still are. Now, if we get past that level, we get south of that 200 propulsion, and we're still double red, I would talk about shorts. But right now, there's more of a tendency off that level to see a potential bounce. Okay, so be aware of that. Thanks for the question. All right, so as far as the calendar goes, where are we on the calendar? What kind of events are scheduled? Well, we have not a lot today. Wholesale inventories at 10 a.m. But oh my gosh, just when we thought we're past the chuckleheads, here they come again. Mr. George Kapowell himself. What's Kapowell talking about? Testifying in front of the Federal Reserve Board of Governors. It's Senate Banking Committee stuff. So look, we already have huge hawkish messaging, Fed fund futures. We know rate hikes are coming. So I don't think they're coming any sooner at this point after having seen what the meeting minutes are all about. I think if anything, what's going to be concerning is how many rate hikes this year are we going to get? And what does the market take away from the testimony? We got to be careful. Clearly, it's a hot zone. It's going to mess with our Tuesday morning trading because he's going to be testifying come 10 a.m. So, yeah, great point. It's going to be tricky. It's going to be a little tricky as we get past that. I'm a little optimistic that we priced in so much hawkishness that maybe he won't sound quite as hawkish as we've discounted. All right. So, yeah, good reminder. Thank you, Michael. Next up, JB says, hi, Raghee. My pleasure. I wanted to say thank you for your videos. I might have watched every single one since you started. Certainly most. Thanks again. Happy 22. Thank you, JB. And thanks for the reminder. Gang, I put out a video every night at the Simpler Trading YouTube channel. We do our charts and coffee, and so what my hope is to share with you, what I'm doing and the tools I'm using to do it. Most, not all, most of the tools on my screen, the indicators, the secret squiggles, as I like to call them, are free. Either free to members or, for example, in the case like propulsion, Darvis 2.0, wave, grab, a slow stochastic. These are free. You can download them over at countdowntrader.com. They're built into the indicators here on the TradingView platform I'm on. And I've been sharing how to set up a slow stochastic with my sort of secret sauce settings. You can catch that on any of the recent YouTube videos. So thank you, JB. I do appreciate that. Thanks, Jim. Look, I think there's a lot of things that we can share. Meaning me on this side of the camera and the mic. There's a lot of things that we can share that hopefully make understanding, interpreting, analyzing the markets easier for you all, right? So I appreciate that. Thank you. John asked about natty gas. Sure. I'm still very much, and now this is a great example of what happens when we're south of the 200. Let's wait. See, this is interesting, John, where you're asking about this, because we are trying to transition from a downtrend to chop. We are trying to transition. The type of tools you'll use in a downtrend are distinctly different than the type of tools you'll use in a chop. In a trend, you use the wave, right? The 34 EMA wave, these three moving averages. And that is really exceptionally good at finding the dips or even where you want to short into the rips. In chop, that's where we move over to the slow stochastic. So be careful, because if we're moving into chop, this is actually an overbought, very close to an overbought zone. But if we continue with the yellow market structure, that means we're going into a chop structure. That means we might have a potential breakout, breakdown from either consolidation, or we could see distribution set up a 1, 2, 3. So a little too soon to tell, but those are some of the possibilities. All right, gold is another choppy market. And not that long ago, I said, hey, where are we in gold? Take a look. The Darvis, look, if you're looking for an amazing combo of tools, I'm going to tell you all right now. In fact, after charts and coffee, or whenever you have a lull in the action, head on over to the Countdown Trader and download the Darvis 2.0. It doesn't have my signals, but it's a really good start to understand the power of automating support and resistance using a 60-plus year process. We didn't use Darvis's process identically, but it's very much rooted in my understanding of Darvis and Darvis process. So kind of an homage, right? I love things that are sort of old trading school, old school type of analysis. So go download that Darvis from countdowntrader.com. It's free. It's my blog here with Simpler Trading. All right. After you do that, go check out one of the videos where I've shown you how to set up the slow stochastic. Right there, that is how you decode chop. Nothing is better than that. It's completely automated. Let me show you an example. First of all, the market has been in a neutral trend since late to mid-November. Neutral, yellow, lower JT multi, that's chop. Always start with the structure. Structure dictates strategy. All right, well, then now I can go back and say, okay, here's my resistance. Thank you, Darvis. And then I can go look for my support. Once again, thank you, Darvis. So now I've let the automation, which is unbiased, right? It doesn't care what I want. It just knows what's happened. There's your range. Now, wait for the Darvis to either get to the top of the range or the bottom of the range. You know, it's remarkable how simple trading can be, but it's simple because we started with decoding the structure. So gold is in chop. If we get down to the bottom of the range, preferably to those double Darvis, nice double Darvis right around 1763. If we can also accompany that move with two things. One, volume says -1 standard deviation is support. Look at that, twice happened. And stochastics will say, yeah, if we can get down to this 20 area right in here, also good level for movement higher. Okay, that's how you do it. That's gold in a nutshell. I have not been trading silver, but I will take a look at it. All right, so silver. So this is ruble. Take that back. This is one of the things that's always tricky with trading view. Make sure you don't pull up the ruble when you're pulling up silver. All right, here we go. So I need silver futures. There we go. So silver's in chop. Actually, silver, interestingly enough, I haven't looked at this one in a while. John, look at this. Mean, -1, -2. Look at the -2 standard deviation support in silver. Okay, that's interesting. I'll keep an eye on that. We are in chop, have been really mostly since October. Lower JT multi is yellow. That tells me we're in chop. Chop then validates. You know how easy this is? When do you want to use a stochastic? Not all the time. No. When this is yellow, when this lower is yellow, use a stochastic. It's closing in on the 20. This is closing in on an oversold buy. Oh, and there's a Darvis. See how it comes together? We don't have to draw things in our charts when we automate everything. So that's an interesting setup in silver. And you can play that with SLV. In fact, I would recommend playing it with SLV or options on silver futures because silver can be a wild one. So I would usually recommend options on that one. SLV is quite liquid. All right. The next question is, do you think Natty Gas can make it to the 50% retracement of the October to November high? I don't pull Fibonacci retracements based on dates. I pull them based on last major moves. And, for me, a last major move would be that minor high to right around that Darvis level or even that minor low. But since we have a lower low, that's it. So can we make it to 453? Tough to say. I'm not going to say yes. The gap close was the first step. If we can remain above the gap close, 453 looks pretty interesting. Yeah, it looks pretty interesting, Seamus. Yeah, it could be in play. All right. And by the way, that's the fib pull from 26 November to 30 December. All right. Tim asked, hey, Tim, KRE. What's the plan with KRE? So we ditched KRE when it stopped trending, right? We had KRE throughout this period of time. See that? Double green. Beautiful time to be a buy the dipper. KRE was really good to us for about 2 months, through this period of time. Okay, so then it went into chop. So what does that mean? When the lower green goes to yellow, I stop buying dips into the wave. We start looking for oversold support. And that's really what you're looking for next. 200 propulsion is magical, especially within the context of chop. All right. And then For those of you wondering, how do you read the stochastics? Look, just wait for it to get at or under 20, or at or above 80. Okay. We don't use it by itself. Once you know we're in an oversold environment, now you're going up here asking yourself, well, at what price level would that make sense? Do I have a Darvis? Do I have a propulsion? This reminds you I want to be a buyer. This reminds you this is the oversold zone. This yellow validates that that is the way we should do it, right? So now, what do I see as we move to the upside? Remember, we're still choppy. So be careful. I wouldn't be surprised if we transition into a trend, which would, if we go green over green, we stop using the stochastic. It has no idea what to do in a trending market. It's going to perpetually think that higher highs are overbought and that lower lows are oversold within the context of a trend. So if and when this goes double green, we stop using the slow stow, just mash it out of the way, or just disappear it from your chart. And then we'll start looking for pullback buys. But for right now, be careful. It's looking a little toppy, but because we're starting to see consistency in grab candles, KRE is one of the stronger sectors out there right now. XLF, financials, KRE, regional banks, they're going to benefit. This is basic stuff, right? They're going to benefit from a higher interest rate environment. And why are they moving now? You might say, but Ron, we've known this for a long time. Why are they moving again now? Because we're actually seeing the timeline to the first rate hikes really start to shorten from what was a June conversation to what's a March conversation. So they got a shot in the arm. So I hope that helps. All right. So gang, as always, thanks for being here for Charts and Coffee. I'll see you all at the Simpler Trading YouTube channel for the free video tonight. And I'll see you all in the rooms throughout the week. So let me know if you have any questions when I see you, wherever I see you next. In the meanwhile, be good to each other, gang. Have a great day.